Hello everyone. Welcome. So once again, live like every week, providing you with the latest news, explaining a bit the fundamentals that actually monopolize the interest the current week, and of course doing our technical and fundamental analysis live. So this is another session for you. Feel free, please, to ask anything you want. We have the chat. Basically, you can comment below the live streaming, either if you're in Facebook, either if you're in Twitter, either if you are in YouTube. Just comment below, and I will be able to see your comment and reply live. So let's start. Welcome, everyone. Welcome. I can see that people start joining. I'm very glad. So before we start, okay, obviously I have a dollar yen chart actually behind me, okay, sharing with you. But before we do that, I would like to, obviously, I would like to first of all inform you regarding what is going on so far today and what you need to know, obviously. Before the US Open. So let me just, okay. I think I'm gonna have at the back the NASDAQ and S&P 500 as well. Let's start with the stocks since we're gonna have soon, basically in an hour, the less no, actually, the US Open. So let me just. We have NASDAQ over here, but I would like to start with the S&P 500, which is preferable, especially after that huge dive that we have seen yesterday. I'm referring to this one, with the Wall Street closing largely in red yesterday. Even though we had a nice rebound so far today. Now, let me explain a bit what happened. Here we are. Perfect. So, guys, don't forget to add your comments. Don't forget to ask anything you want. I'm here for you. Put the asset that you want me to analyze. If you want a specific time frame, write it down as well, and I will get back to you. So, so, let's start with the basics. First of all, guys, as we have seen last week, but it was quite more obvious this week, we have a lot of risk coming from elections. What I mean? Basically, I mean that because we are basically actually less than 2 weeks away from the U.S. elections. There is a lot of cautiousness, and there is a lot of, let's say, fear regarding the US election. So this is something that is actually started showing some teeth, especially with regards to the safe haven demand. That's why we have seen a significant um, a significant appreciation of dollar, gold still rising, as you know. Some corrections have been seen overnight, but well supported. As well, in general, the safe havens were in demand. It's not only the elections, but that's one reason as well that is back in play. And it's something that we haven't seen since 2000, since the previous election, actually, 2020, 2016. Okay, so back in play, we have the elections, but also the earnings. Okay, we have earnings driving the market as well. We had some mixed reports overnight, but so far today, we have a lot of surprises, positive surprises coming from the earnings calendar. And more precisely, I'm referring to Tesla, of course, which had a really, really, really solid result. That's why we have seen today Nasdaq and in general the US indices rebounding and regaining some of the losses that we have seen um, yesterday. So Tesla, okay, since we're speaking about Tesla, let's see Tesla. Even though, okay, sorry. So, oh, perfect. We see the Tesla. Here we are, and we have Tesla. Let's make it a white background. Obviously, the market is still. Basically, I'm gonna keep it open like that, in order to be prepared as soon as the U.S. market open. Okay, just to see whether we're gonna have a jump on the U.S. open. So I'm putting over here. I'm getting prepared in a 15 minutes chart just to be prepared as soon as the U.S. Market opens to see the reaction. But have in mind, guys, and you can obviously see it from your Nasdaq. You can see it from your S&P 500 as well. That as well, they are well appreciated. They found some ground. They recovered more than 60%, I will say, from yesterday's losses. Let me measure it as well. Yeah, more than 65% of yesterday gains. And one of the reasons is also the fact that we had pretty solid results. Are you all with me? Good afternoon, Samuel. My main okay. I wish that for you as well, Douglas. Which I so okay, guys. This is not a currency pair. This is Nasdaq in 1 hour chart. I haven't started yet. I'm just explaining a bit the fundamentals for the time being. Someone, if you're losing, okay, constantly as I can see, then you need to take a step back, my dear friend. Okay, stop what you're doing because obviously your trading plan or your strategy does not work. Okay, take a step back. I don't know if you are in I don't know where you live. Maybe you mentioned in the past. I don't remember. But if you're close to an educational center of ours, please pay a visit to our come and visit the premises. Uh, my colleagues you, but for sure, take a step back. Check your trading plan, check your system, check what went wrong every single time in order to improve your strategy because it seems that it doesn't work. Okay, and please uh, start uh, basically not start but keep yourself up to date with the news and also check, go through some webinars that we have, some sessions that we have, some classes that we have, just to figure out what you're doing wrong. Okay. Now, okay, that is a very interesting question over here. I'm gonna come back to you, cook it. Okay. For now, it's Nasdaq over here. Okay, this is Nasdaq. Yes, yes, indeed. This is Nasdaq. I'm gonna put in a note so you can see it. Uh, overlay. Just okay. I have put it in the bottom. Okay, guys, I've put it in the bottom just for you to see. or I could Nasdaq. Okay, I think now is clear. Yeah, on the left hand side, easy peasy. So, as we can see, reverted more than 65% of yesterday's losses. Tesla is one of the reasons that we have seen this boost and lift in hopes for a strong earnings season. Also, we have seen other companies reporting positively and having actually growing their sales and their revenues, and they had quite an impressive increase in their sales in the third quarter. Not so big companies, but well known. I mean, I'm referring to Hermes. I'm referring to LSEG, also Barclays as well, if I remember properly. We had a bit of a disappointment yesterday. That is what it led this dip yesterday. I'm referring to Boeing, actually with significantly had actually a significant loss. Okay, but Tesla is what actually boosted the pre-market sentiment. Over 80 billions right now in market cap. Forecast for the next year are up to 20 to 30% growth in electric vehicle sales. So that is something, guys, that is supporting Amazon as well, Meta in general, the tech sector, in general, the tech mega as well after lacking yesterday significant. The big story yesterday it was the Boeing. Okay, remember that we have seen strikes from workers, and actually they had around, if I'm not mistaken, around 6 billions worth. I think 6 billions of reportedly loss, significant loss, and that's pretty much what we have so far from Boeing. But added a lot of pressure, on the in the stock market yesterday. And as I mentioned, it's not only that, also in anticipation of U.S. election is the fact, something that I haven't mentioned is, in the past, maybe I mentioned it just once last week, guys, but the depth in the US is what is driving also the attention and what is causing a lot of fear in the market as well. The US debt is rising and rising and rising and is becoming a significant concern. It's causing a lot of fear into the market, and this is also something that weighs on stock sentiment and treasury sentiment. That's also one of the factors that led Wall Street yesterday and treasuries under significant pressure. So yeah, I did. If you are following us, if you're checking our articles, you will have probably see that what we announced yesterday morning and this morning as well, and we explain in our articles that uh, uh, there is a lot of fear regarding the depth. There is a significant surge in the debt, and this is something that further exacerbates the inflation fears. Also, expectation for deficit is also in play, regardless who will win the elections. And basically, the data and the bench book yesterday failed to give any reassurance or calm down a bit sentiment. Okay, what did support the market today is Tesla. This is the Tesla story because geopolitical remains in play. Elections also, and this uncertainty around elections is a negative factor. Debt is a negative factor. So um, there wasn't any positive, a positive factor other than Tesla story today is for the stock market. Now, let's move on. Basically, let's see the technical of Nasdaq. Okay, let's move on with the technicals for now, at least. So, my dear friends, let's have a look. Let's have a look. So, as you can see over here, I would like firstly to remind you that I have, it used to be in a channel, right? Used to be in a nice short term channel. Okay, let me just be precise. That's it. Nice and easy. Okay, here we are, which largely broken yesterday. This is 1 hour chart, pushed down and it bottom at 19,940. Okay, and uh, since Asia session overnight, it went back to the channel above the 20,000 territory, with the next key resistance level being at 20,380 um, and 80 I8, as you can see, is from my pivot point analysis, but also coinciding with the resistance that we have, this triple resistance territory over here, back in basically the last 1, 2, 3, 4, 5 days in a row. That's a significant resistance zone for Nasdaq. And if you have seen the post from one of my colleagues, Addis, okay, he explained and actually did some great technical analysis for Nasdaq, with the imminent resistance levels be at 20,789 and 20,380. Okay, so the fact that it returned back to the 20,000 territory. 20,000 territory, guys, is a key psychological level, is a barometer for Nasdaq, okay? And the fact that it broken it and returned above it, okay, is a bullish sign for S&P 500. Not only because it's a round number and it's a triple zero number and it's a psychological level, but also because that means that the asset is moving above the 20 and 50-day moving average. So if I shift into a daily time frame, okay, and I change my moving average into 50 and 20 moving average in a daily time frame, I repeat just for you to see, you will see that the asset held well. Despite this pullback, it held above these two key moving averages that supporting the asset since 11th of September. Okay, so it rebounded away from it, it stays above it, these are well supporting the asset. And how you can tell, because they are not only providing a nice support level since September, but the fact that the gap between them it gets wider and wider and wider indicates that there is no fear of a bearish crossover crossing of the two. Okay, so that indicates that the trend is still on and there is a bullish um, trend in dollar in sorry in Nasdaq. Remember that we have seen the Nasdaq rebounding since July, posting another higher low in August, and since then it keeps extending higher, with basically uh, the just not far away from the previous record high, from the all times record high at 20,782 is what Adi is saying, which is 20,789 is the all time highs, which is the a key resistance level if the asset managed to extend higher and break these previous resistance levels at 20,100. That's in the medium term. Intraday, remember what I told you, that it returned back into the channel. So for anyone that is an intraday trader, the next resistance level is over here at 20,380. The first resistance of the day from a pivot point analysis coinciding with the latest triple upswings, um, and also the mid of the channel. Okay, also very close to 88.6 Fibonacci level as well. So I'm gonna bring back my 5 and 9 exponential moving averages. Okay, because we need to analyze the 1 hour chart as well, something that I haven't done. So you see, we had that bullish cross initially at the beginning of the day, actually over midnight, actually 3 o'clock server time. Since then, we have seen it rising steady initially, bounce to the European Open, steady a bit, again another bounce as we get closer to the US Open. And it seems that even though it's a bit in a pullback right now, however, and the indicators are a bit neutral. The same stands for Nasdaq as well. However, since let me just since the US hasn't opened yet, uh, we need to still wait and see. However, if we consider the pre-market data, we are expecting a positive session. We are expecting a a bounce as soon as the market opens. Um, so that's for Nasdaq. S&P pretty much the same as well, guys. Okay, the same. We are expecting a quite positive Thursday morning for the US indices after this consecutive, let's say, dip. This is the S&P 500. Let me change the, here we are, perfect. So after this 3 days strike lower, we have it's quite supported, so we're expecting a rebound. Now, I'm gonna leave the stock for now, okay? I'm gonna leave a bit and check your comments as well. And what we have over here, euro dollar, yes, of course. So, guys, let's speak a bit about cable, about euro dollar as well. I'm sure you have seen the decline. I don't know how many of you were here when I analyzed this asset and I put these lines on. That was back on, when was it? It was on the 10th of October that I draw this M formation, which is a bearish formation. I did mention that we had the breakout of the neckline at 110 territory, and I did mention that by measuring the length from the top of the pattern to the neckline, you can find out where it's expected to go. And my analysis was proven nice and correct, and I'm really happy for it because indeed, 9 days after it reached the bottom support level, the target area based on the M formation in the break of the neckline that was spotted back then. So, euro dollar, pound dollar. They remain under pressure because of the strength in dollar, but also because the central banks, okay, ECB, sorry, ECB, Bank of England, Bank of Canada, um, they are ahead of the Fed. What I'm trying to say, they are they they will cut. They have cut interest rates, but they will continue dovishly. They will continue cutting rates. They will continue actually um, uh, cutting rates within the year, something that is not certain for the Fed. The Fed, considering the latest data that we have seen, and as I explained several times in my previous life, the Fed, based on the data that we have seen this month, uh, sh- uh, we have back in play the scenario of no change in the interest rates for November. So this is why dollar supported because markets have paused a bit and stopped pricing in further rate cuts for the Fed, and instead they do price in um, rate cuts for ECB, for a for pound as well. And that's why we've seen that dip is the dip continues for euro, dollar, and pound. You can see how you can't. Let me just I think now you can see that. You can see that momentum is well below zero in the euro dollar, right? Well below zero, and it keeps pointing further lower. RSI is at 30 territory. Okay, it points a bit higher, but even that it could be just correction or a bit of a consolidation, a bit of a steadiness before another attempt to the downside. Because as I said, a pretty dovish ECB comments, pretty dovish Lagarde comments. Um, we do expect actually uh, the rate cuts, further rate cuts from ECB, and this is something that uh, adds pressure to the euro. The data also support this dovish um, this dovish tone in the further rate cuts from ECB. If we consider that the PMIs today, I don't know how many of you have seen the PMIs releases. Where I have my calendar, calendar. Sorry. Okay, here I have a calendar. So this morning we have seen the composite PMI in Europe contracting once again. So once again, the composite PMI remained below 50. That's contraction. Okay, even though the services improved a bit, the news are not good, and we have seen that the manufacturing the services, the manufacturing in euro are still in contraction. Okay, presenting clear weakness. Sorry, sorry for that. So, yeah. By the way, there is a meeting between the central bankers this week in Washington. So we keep having some comments coming out from Lagarde, from Mr. Bailey, from Mr. Powell as well. So all these actually, there wasn't any surprises in the meeting in Washington. Just the fact that we keep having dovish comments coming from the European officials and the ECB officials. So just that, just to present you something, just to show you some people tend to ignore the PMIs, okay? Some others don't, but I would like to show you how important it is, okay? So here is a euro dollar 5 minutes chart. Let me write it down so everyone can follow us. Um, wait, the options. I'm gonna put Euro USD 5 minutes. See that? Yes. We can. Okay, perfect. Why I'm presenting that? Let me zoom in as well. Excellent. So can you we just detect that so we can see that? Okay, what's going on over here, guys? You're all with me. You're okay, right? So right now we are analyzing euro dollar. Okay, so just a bit of let's do some let me teach you something regarding data because we had a very interesting question earlier from Kurt saying, how do we predict the direction of highly volatile news? I will say you can, but basically, dear, um, you cannot predict it. Okay, you can set some pending orders, some trigger points that will could open as soon as the release is out, but you cannot really predict what's coming and how the markets react, right? Um, the only way to help you come closer, let's say, to the potential direction of the asset at the moment of the release is by checking what the institutional players are doing. And I'm referring to the commitment of traders, the report that is released every Friday, and you can see how the big players uh, positioned uh, positioned. Um, so that gives you an overall, basically that gives you a direction in a medium and long term um, basis. But let me explain something. Okay, let me just stick back to the to what I wanted to mention regarding to explain regarding the PMIs this morning. Okay, this is a euro dollar 5 minutes chart. Okay, are you with me? So, um, sorry for that. Just a second. Yes, here we are. So, can you see, guys, that uh, we have this? That was at the time of the announcement. Okay, so uh, there was an initial dip. Okay, and this is when France announced its PMI, okay, and more precisely, this candle, to be more precise, that was on the announcement of French services PMIs, which actually contracted significantly in France. So the France PMI services PMI came out at 48.3 versus the 49.9 expected. So that's why we have seen an initial pressure, okay? While as soon as the German PMIs came out, boom, that huge candle is on the German PMIs. So to reply to Cookie's question, something that you can do is analyze 5 and 15 minutes chart on the release, okay, in order to figure out after the market noise the real direction of the of your asset. Okay, so that's an excellent example. For okay, so 5 minutes chart. French PMIs disappointed because they were negative. Actually, they were clearly presenting that services in France actually worsen than improving. While as soon the German, I'm sorry for that, as soon as German PMIs released, and they showed that the manufacturing PMIs rose at 42.6 versus the 40.8, which was expected. So, with expectations. And don't forget that the German economy is the biggest in Europe. So, that's a more important release than the French reading. So, that's why we have this huge candle reverting the losses from the French PMIs, and the next candle, which was again a strong one, um, confirmed that the PMIs will support for a few minutes at least the euro dollar. Okay, and we can see that for another. Uh, let's see, that was for another. Um, let me check. 35, 11:50. Actually, for more than an hour. Am I right? 20, yeah, for more than an hour, euro dollar kept rising. Like, yeah, yeah. So bullish candle, strong body candle, big one without any tail at the top indicated that bulls are in control. That confirmation came with the next candle, which actually boom boosted higher and closed positively, indicating that this direction will continue for a few more minutes, and it did it last up to an hour, more than an hour actually. So that I could, if you were waiting for this candle to close before you take a decision, you might had profit around 100 points. 100 points. So there are, if you want to trade the news, there are a lot of strategies. They are toolkit. However, trading the news exactly because it's the high volatile ones, because of the volatility, they might kick easily your stop loss. They might do some ups and downs sharply, and the positions are getting wider as well. You need to have in play a well-tested plan, a well-tested system, and you need to be actually expert with fundamentals. You need to have a strong risk management technique as well, supporting your system. Okay. Okay. So, uh, yeah. So, have you seen how this balanced out? Okay, the euro supported with the stronger than expected German PMIs that that actually uh, beat the French PMIs and supported the euro dollar for at least an hour. Uh, and that's why we've seen this correction of euro dollar up to 108 territory. Since then, it's consolidating. Okay, it's consolidating as you can see, steady bouncing between 107.90 and 108 territory. So the whole day basically. Overall, however, guys, the numbers were disappointing. They show contraction at the start of the fourth quarter. Eurozone economy is still leaning towards a bit of a soft. It's leaning soft, let's say. Okay, um, at least the numbers were that bad. But the fact that they came out below expectations and actually came out in contraction is something that supports another rate cut from ECB in December. So, and actually, we even have seen the possibility of 50 points rate cut in December. So the odds for 50 points rate cut in December uh, actually increased today. The market right now, so far, okay, are pricing in an 122 points rate cut by ECB for the next 5 meetings. Okay, so have this in mind. And obviously, this is supported also by the dovish comment. So, regarding euro dollar, guys, as I explained earlier, the overall picture doesn't change. It remains under pressure. It remains in a downward trajectory. But I will get back to the 30 minutes chart. Okay, this is the 30 minutes chart. Okay, 30 minutes chart. As you can see, is consolidating the whole day. But for anyone that is an intraday trader, you need to keep an eye on the sorry, on the basically basically on the pivot point of the day, and the high of the day. A break of 108 territory, more precisely the first resistance of the day, 108.3, could indicate some further room to the upside, but not too much, guys. There is no sign of of rebound. Okay, so it is what it is. There's further room to the downside, though. So these I have set right now the 4 hour chart on purpose just to show you that this rebound is just a swing higher before another attempt lower. So it's another lower high. So look at that. Look at that. Here we are. It's another lower high before another lower low. So there is one way. Momentum remains negative. MACD is negative, RSI is neutral but below 50. So, and the price action is quite clear. Okay, so a reversal, a clear rounding top at this point will just indicate that it will extend again lower with the next level to be closely monitored to be the 107 30 at 107.40 level. Okay, so a pullback over here in a cross seam, you can use pivot points, you can use a channel like me. So a break of the mid of the channel, so this line over here, could indicate and could be trigger point uh, uh, for a swing lower down to 107, 107.30. That's was for euro dollar. That was for euro dollar. So I'm gonna save this. Okay, let's move on with the next question. David, I didn't get your question. Are you referring to specific asset or in general? What factors, fundamental factors, what news actually added pressure in the stock market? Please specify. Good afternoon, Aliyu. Dollar pairs. Okay, I cannot really say what to buy or what to sell, but what I can say, my dear friend, is that Um, we have seen, let me get back to the dollar. We have seen a significant and impressive rally in dollar. Actually, the whole the whole October. Okay, you can see that MACDs keep rising. RSI is at 70, however, is ready to cross below it, but we need to wait and see. Some will actually confirm confirmation. But yeah, dollar had a sharp rally, moving average and keep pointing higher, indicating that there is further room to the upside. So as long as it remains above the 200-day moving average, which is over here, 10360 level, you see? So this line is the 200-day moving average, which coincides with the 65% Fibonacci level and also coincides with the support zone back in April, May, June. So as long as it remains above it, there is no indication for a reversal of dollar in the medium term. Okay? Out of curiosity, let me check by using my high Kanashis as usual. And just to check the momentum, you see, consecutive bullish candles, high Kanashi candles without any tail at the bottom, indicating that there is still some room to the upside. It hasn't peaked yet. Okay, it hasn't run out of steam yet. In order to confirm whether a trend is running out of steam, for example, using high Kanashi, you need to see you need to see, for example, let me just take you back. You see over here, the confirmation that it might have peaked, might have came as soon as we had a smaller body, okay, below the previous one. And then the next day, we had a doji candle. All that were the first signs that is running out of steam, indicating that it might reverse. So the confirmation of a reversal, sorry, came out as soon as we had the, sorry, we had the first high Kanashi candle without, sorry for that, we had the first high Kanashi candle without any tail at the top. Okay, that was the very, very first indication. It steady a bit, doji a bit, before actually extending further lower. But the bearish control was clear over here. Okay. Um, yeah. So let's move on. So let's go down to the 1 hour chart and the intraday chart. The intraday. Let's do some intraday analysis for dollar. As you can see, pulled back so far today, but it's still is at actually at 104 level. So it found the support for 1, 2, 3, 4, 5, 6 hours in a row. Okay, so that's that needs to be largely broken, not just retested like now. We need a full candle closing below it in order to indicate that it could continue lower with the next support levels at the latest swings, which is at 103.80, 103.65. Now we need to see a bearish candle closing below this bottom. Okay, so for now, steady sideways consolidating. Only a break of that level could support further dip. But because we have high Kanashi candles here, guys, this consolidation indicates that we might see a reversal, a rebound, because it's high Kanashi, okay? It's high Kanashi candles. It's not Japanese candles. So the dodginess in high Kanashi candles, indicating the possibility of a reversal. And in this case, the possibility of a reversal suggests a move higher. But we need confirmation. As I said about Fibonacci, confirmation needs to come once we see a candle, a bullish one, without any tail at the bottom, like this one. Okay, you see, pull back and jump, bullish without any tail. It was a bit steady the next 2 hours, but it kept rising and rising and rising and rising and rising. Okay, that's the beauty behind Haikenashi. And if you want me to go back to the candlesticks, be more than glad to analyze also the candlesticks. So look at that, pull back, right? Steady for 1, 2, 3, 4, 5 hours in a row, right? The fact that it's steady, along with the consolidation of the moving average as well, the flattening of the moving averages indicate that the dip is running out of steam. Okay, as you can see, RSI also flattened, and and stochastic actually bullishly crossed, pointing higher. So that's a primary indicator that we might see a rebound. But guys, we need confirmation. So we need at least to see the asset breaking that previous high at 104.14 and closing above it in order to suggest that it will return back to 104.39 level or even higher. But for the time being, is consolidating. You can use your Fibonacci's, you can use extensions, you can use any asset, any indicator you want to do the same analysis, consolidating. So we need to be a bit patient. Um, dollar yen, of course, dollar yen. This is dollar yen in 1 hour chart. Before we do that, ringing the bell that I did tell you about this descending triangle and the fact that if it breaks and extends above it, it could indicate a return of dollar yen to the second quarter's area. Indeed, dollar yen, because it's a safe haven, but also because in Japan we're gonna have on Sunday elections, so there is a lot of uncertainty in Japanese from Japanese in Japanese elections as well. This is beneficiaries for safe haven. That's why dollar yen is also in demand. But also, guys, but also we had a lot of um, uh, sorry. Um, it is the Japanese elections that are adding to this uncertainty, supporting the dollar yen. Uh, it is also um, um, the fact that sorry, you have a lot of cash flows out of Japanese market into a more profitable markets. Okay, there is a lot of repositioning going on from country to country right now. More precisely, there was there was a report from, let me find out, something that I noticed last week was Goldman Sachs actually, that they announced that they have seen um, hedge funds selling Japanese stocks at their fastest pace in 5 years. So what that means, basically, they are going out, selling their Japanese stocks, and they move elsewhere. That's why that's why cryptocurrencies well supported. That's why US dollar was supported. That's why US indices were supported. So there are a lot of hedge funds actually selling their position in Japanese stocks and moving elsewhere, and that's why we have seen selling in Nikkei and selling in yen as well. Um, that's something that you understand, that if millions are moving in the market, we are seeing really big moves. And also, don't forget that other than the elections, we still have the Bank of Japan, which is expected to hike interest rates. But we haven't seen really something yet. So obviously, there is some uncertainty over there as well. Now, especially, sorry, yes, I remember that the Japanese officials last week, they mentioned that they will not hike yet because there is a lot of volatility in the market, they said. So they will keep monitoring the data before they decide to hike again. So that's something that pressured the yen and the Japanese stocks. But my dear friend, yes, we did. You have seen 150 broken, 151 broken, 152 as well. So right now, after it extended, actually, let me put the 1 hour chart. Okay, after it breached 153 level, this is an area that we haven't seen since July. Uh, there was a correction so far today. And look how beautifully this analysis earlier this morning, how it played out. So I had put from this latest fractals that I got in dollar yen in the 1 hour chart. I put a Fibonacci extension, okay, just to find out. Let me zoom in for you to see better. Just to find out that was uh, this morning before, as soon as I came to the office, before the European Open, as soon as I sat down with my coffee, when I was watching the dollar yen. So as soon as I saw these fractals, I put a Fibonacci extension just to find out the nearest intraday support level. So by sorry, by the European Open, actually half an hour after the European Open, where is the European Open is here. Yeah. So at the European Open, my asset already had broken and retested, broken the 61.8 Fibonacci level and retested the 100 um, uh, uh, Fibonacci level. But the very first 30 minutes, of the very first hour, I should say, of the European Open, it did manage to sit, actually to retest it again, and it closed pretty close of the 100 Fibonacci level. So 2 hours into the European Open, and it finally broken it. Okay, but if someone was trading the Asia session, or if you wake up earlier than me, you should have seen this breakout, and you could have um, taken that trade. As we have seen, uh, we stayed over here, in bottom over here, we found some support, and we have our very first two uh, positive high Kenashi candles. But the fact that I don't really have a, not a full body one, a high Kenashi without any tail at the bottom, it doesn't give me a confirmation of a rebound yet. But let me get rid of this. Instead, I will put the typical Fibonacci, okay, just to be prepared to measure this rebound, okay. But over here, the fact that it bottom over here and start having positive candles, that implies to a potential rebound. So you need to keep an eye on it. This is the 30 minutes chart, which will help. Okay, so we have four consecutive positive candles. So the asset started appreciated. Obviously, uh, we already have some potential target levels. You see, use your Fibonacci's or use the previous fractals, or up to you, up to you, up to you. Okay, but the reason why in this case I'm not really, I don't have that confidence yet is because I can see. Let me just. I would like to put the stochastic indicator over here, which is my fast oscillator, because it will help me. Okay, okay, and will help me to decide. But it seems that this is quite weak yet, still weak. You see, you can't see. Okay, let me just, because my head is in the front. Um, Even though our high can actually started being positive, but still without a high Kenashi, we always need a high Kenashi without any tail at the bottom, like these. You see how nice this rally was. Clear, no tail at the bottom. The candles were getting bigger and bigger and gave you that confirmation. Here we don't have that yet. Not only we don't have that yet, but also RSI and stochastic are pointing to the exact opposite direction. RSI failed to extend at above 50 and actually started pointing a bit lower. And stochastic had a confirmed bearish cross over here. So, so for now, there is no clear direction. There is a bit of a indicators are leaning towards, they are leaning lower, while the price is just leaning higher. So we need to be a bit patient. Possibly, you can just start monitoring the 30 minutes chart in order to confirm the direction, the possible direction of the asset. But yeah, yeah, it is what it is. It is what it is, my dear friends. And if I'm right, that would be another. So as this candle close, this might be another fractal drawn over here. Uh, uh, so yeah. So for now, it's stuck between 152 and 150, 170 level. So be a bit patient here, Leslie. That's the intraday picture, guys. Overall, it's crystal clear. Consecutive candles keep rising and rising and rising. Let's do some. Um, let's do some daily analysis as well. Actually, we have done it already. Let me just refresh a bit. Da, 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 da. Yeah. Let's put the photo. chart. Nice and smooth. Keeps rising, corrected a bit so far today, but the rally is still intact. You see, boom. That might looks like an inverse head and shoulder, but what's done is done. That one. The high natural remains bullish without any tail at the bottom. So yeah, guys, it is what it is. I mean, next ceiling. Let me just draw it again because I deleted it earlier. So we go. You can even use Fibonacci extensions as well. And this latest swing high, but that's over. Where's my fractals? Here it is. So with the previous support level, with the previous resistance levels, you can find the immediate resistance level that was already breached. The 161 Fibonacci level from this latest swing was already breached, not broken yet. The asset already um, actually. Oops, sorry. What's this? As I said, it's back to July's territory. 150 around 153 was retested yesterday. A break of it could retest the next resistance zone, which is at the highs of 154 level. So 154.50 and 154.90 zone. This is a nice zone because it's 5% Fibonacci level, but it's also the latest swing low back in May. May and July, I could say. We are one, two. So further consecutive daily candles indicate to a retest of 154 with the momentum also supporting this scenario. Let me just, here we are. You see, keeps rising. And you can monitor it by checking the 4-hour chart as well. Um, Gold. Yes, last one for today, guys. If you have anything else, now is the time to put it in the chat box. Yes, our gold, actually, the precious metal had a bit of a correction. Some profit-taking conditions played out. So there was a bit of a correction in gold, but that's just a correction, okay? It fell down to 27,000 territory, but that is not changing the overall picture, right? Remains in a rally. I'm gonna extend. Oops. Here we are. It's still just close to the record highs. It had a bad day, some profit-taking conditions over here, but as you can see, it reverted the majority of yesterday's losses. There is nothing really major over here. There's no indication of a pullback. There is nothing. So recovered back above pivot point, just a breath below the reverse resistance of the day. Momentum eased a bit, so it's like it's stuck in a ranging market the last 2 days, possibly ahead of the new week which is a gigantic week, and it's an NFP week as well. Have this in mind. So we might see a bit of a cautiousness. We might see some steadiness. Okay, so we are nearly at the end of the week. Next week is a massive week, as I said, full of earnings releases, NFP week as well. So we might see some cautious trading. So people basically um, uh, possibly waiting for the upcoming week and remain a bit muted. I mean, trading to stay a bit muted ahead of the new week because it's packed of data, packed. Other than the NFP, we have budgets from, sorry, we have consumer confidence from US. We have the elections in Japan. We have consumer confidence in Germany. We have Swiss inflation, if I'm not mistaken. Yes, we have housing and jobs in the US, inflation in Australia. Um, uh, z- um, um, I'm stuck. GDP, the growth in Europe and in growth in Germany, consumer confidence in Europe, inflation in Germany. Uh, we have manufacturing PMIs from China, Bank of Japan interest rate decision and press conference. Um, so inflation in Europe, I did tell that. I did PCE, PCE numbers out from US, and it's an NFP. NFP on November 1st. November 1st, something that doesn't happen very often, right? So, yeah, plenty of news next week. So, yeah, there is some cautiousness over here and some new trading ahead of the new week. We might see an even more cautious, muted trading tomorrow as well because it's Friday. So yeah. Um. Oh. Well. Yeah. Okay. Okay. You're right. I forgot that. Thank you very much. Thank you very much, my dear friend. Thank you very much. And let me check regarding the data. Jobless. Okay. Yes, you're right. And you know what? I'm gonna put the 5 minute chart just to see what's going on. This is the 5 minute chart in bold. Change the caption as well. Bold. And 5 minute. Show. Brilliant. So, okay, guys. So, let's see. We're gonna have the PMIs of US right now in a minute. But before that, we did have seen the jobless claims that beat expectations and they revised higher once again. That's very interesting actually. And I'm sorry for not seeing that. So it seems that there is some on the data. Okay, there was a boost from the jobless claims for gold higher, but apparently on the PMIs there is some selling. Which let me refresh my economic calendar. Okay, they are not out yet, but there is some selling going on over here. That's a 5 minute chart in gold TRs. Okay, so let's see. Come on. And you know what? I'm gonna have my high cannon show. Ooh, okay, come on. Refresh. Nothing. Okay, PMIs, services beat expectations, manufacturing PMIs slightly above expectation but still under contraction, and composite PMIs improved, something that is quite positive for the U.S. economy, but still really close to the 50 zone, the neutral zone. So there is some selling in dollar in gold over here against US dollar on the PMIs. From the jobless, we've seen a boost and a reversal in the PMIs. The numbers are a touch hot, right? But still pointing that the US economy is just fine. Um, so just check. So, okay, there is some correction going on over here, but okay, this is a 5 minute chart. I repeat, this is a 5 minute chart. So, wait a bit for this candle to close, and if it remains that huge and big without any tail at the top, that indicates that it might retest the previous bottoms, and I'm referring to 27.35 level, 20, yeah, 27.35.60, 27.35 level. But that's just, this is a 5 minute chart, guys. Okay, 5 minute chart. Okay, be careful. 5 minutes chart. So, um, also would like, since, yeah, the US economy is doing just fine. Maybe that's why we've seen this pullback. The data supported that the US economy is doing just fine, even though the data are slightly above the 50 level, the neutral zone. But yeah, that's why the dollar is a bit stronger than gold. We've seen this reversal. But again, I repeat, this is a 5 minute chart. It doesn't change for the time being the overall picture for gold. Okay, so here we are. I would like to have a Fibonacci extension over here, already breached, not broken, and the 261 is down to the 27.32. So these two remain, three actually, they remain the next support levels after this big dip that we have seen after the data. The data are positive, and this is what is causing the pullback. Basically, the indication that the U.S. economy is is doing just fine, as I said. It's growing slowly. Jobless claims actually beat expectations, something that also suggests that labor market is still quite sorry, jobless claims, the jobless claims. Sorry, let me double check. Jobless claims. Yeah, they beat expectations. 227,000. Above forecast, revised slightly lower. The last week's um, data slightly higher. So that suggests that we have possibly continuing already. Oh, hey guys, already broken my 27.35.65 and 27.35 level, and that candle closed That kind of close, and it's a big one, indicating that in the very short time frame, such as this 5 minute chart, there is further room to the downside. Let me take a step, zoom out a bit. So there's this 27. Let me just. I'm gonna flip up higher to the 15 minute chart just to find the next possible support level, even though still have over here around 27 now. Bam, bam, bam. You just, okay, it's just fine. Measure it. Okay, yeah. Sharp selling continues, and it already touched. What's going on? I already touched my 27.32. Can you see right now how powerful high ashes could be during the data releases? That was really nice, guys. I'm really glad that I just. I'm really glad that Hyoko asked about the data, and I'm really glad that I have done this analysis with you in a 5 minute chart. Woohoo! Guys, 27.30 and it's keep moving lower. Jesus Christ. Jesus Christ, that the body of this candle is huge. There is some selling pressure in the very short time frame actually. So, okay. Dear, I cannot share my records. Unfortunately, sorry, I cannot share anything because I am licensed. This is not allowed by the regulator. That's why the only way to help you is by doing this analysis, just to help you find out, improving your system, and see different approaches. So you can see, but I cannot share my track record. But if you're someone that's trying to find a strategy provider, I mean, someone to follow, there is always our trading program, which there are a lot of strategy providers that they are doing their own trades, and you can copy their trades without any, with full flexibility. You can close it anytime, you can open it anytime, you can amend it as you wish, and etc. etc. Okay, so if this is what you want, dear Habuk, so have a look on the copy trading product that we have. Basically, some of our very successful strategy providers. And, you can see their records, you can see their profitability, you can see their stats, and you can find out which one you want to follow, um, or if you want to follow more than one. So, guys, yeah, that was pretty much it. Be careful. Obviously, it's a 5 minutes chart. I repeat, a 5 minutes chart. Okay, so stick on what you see, not what you think. As soon as the Heikenashis start detecting or doji, right? Start start seeing some tails at the top as well, smaller body candles, and doji. That it means that the dip is running out of steam. For the time being, there is some selling in gold in this 5 minutes chart. So yeah, thank you very much. I'm gonna call it a day because I'm quite tired. I'm speaking for an hour and a half. Um, have a great day ahead. Take care and see you again next week. with two live analysis next week, one by Mihalis on Thursday and one by me on Friday with the NFP. Thank you very much. Have a great day ahead. Bye bye.